Well, gathering right now in Jackson Hole, Wyoming are the world's central bankers. They are meeting to discuss global growth and long-term policy. Bloomberg's Michael McKee is live with former Fed Governor Randall Kroszner. He's a professor at the Chicago Booth School of Business. So, Mike, all yours.
Yeah, thank you very much, Carol. We should mention this conference is supposed to be about long-term strategies for ensuring U.S. growth, but it's become all about Ben Bernanke and short-term strategies for fixing the economy. We want to talk about some of those first with Randy. Because you were on the Fed, you know what it's like in there. Everybody is saying, Wall Street, forget it. You're not going to get any kind of decision tomorrow, and you probably won't even get a strong indication of what they would do. Would you agree?
I think that's right. I mean, the FOMC is a deliberative body, and they make decisions through the committee, and it would be extremely unusual to make an announcement about a committee decision through just one person's speech rather than through a committee statement.
So what's Ben Bernanke's main task then tomorrow? Is he going to be trying to explain where we are with the economy and why they felt they had to act to change the language on August 9th? Is he going to be trying to lay out options for the future or some combination of the two?
I think it'll be the combination of the two, because he's got to lay a foundation for where's the economy now. We've downgraded our forecast from the previous meeting, so he's got to explain that. And then he'll say that, well, if conditions deteriorate, then we're exploring other possible options, not making any promises, and go through the options that you had just described earlier.
Well, it was a little odd in the sense on August 9th that they did, in essence, downgrade their forecast, but it wasn't a meeting at which they make forecasts. So what do you think he's going to say about where they see the economy now?
Well, I think the data are mixed, and I think he's going to give that view that things are certainly darker than when they had met in June, but I don't think things are going off the cliff. I think if you want to pick out some positive numbers, you can pick out retail sales and durable goods, but you can also pick out some very negative numbers like the purchasing managers surveys. So I think he's going to say things are darkening, there are a lot of risks out there, and we're doing appropriate risk management by thinking about things we can do if things deteriorate significantly.
We haven't heard from the chairman, but we've heard from some of his closest allies like Bill Dudley, the New York Fed president. They say still they expect growth to pick up in the second half. Is that because the sentiment surveys, the purchasing managers, as you mentioned, the consumer confidence surveys have been taken during this time of incredible uncertainty, particularly with all the mess that went on in Washington?
For sure. I mean, gosh, you can't help but think that that's going to have some impact on people's views going forward and creating more uncertainty. But there is a lot of uncertainty about where the economy is going. The concrete numbers are going in different directions, and so I think it's reasonable to think that we'll have a gradual recovery, but probably much more gradual than the FOMC had thought just a couple months ago.
Now, you said you did agree that he probably will lay out some of the options going forward if the Fed had to do something. What's the most plausible?
Well, I think one of the things that would make a lot of sense is to give a little bit more guidance about the balance sheet, about the portfolio, because now the Fed has become completely transparent about interest rates. Not only they're going to keep them low for an extended period, they've given a date. And the next policy tool that they have is really buying or selling securities, or buying longer-term securities, taking out a longer duration. And so I think giving a little bit more clarity on that, and then maybe making part of that a regular part of the FOMC statement, I think is a natural direction for greater transparency.
Does he run a risk if he does that people might pick up on something out of that and say this is what they're going to do next?
He always runs that risk. I think what he'll do is probably talk about a number of different options and talk about the costs and benefits of them, and say that they can be effective in different circumstances. I think things were very different last year when he gave that speech. The enemy was much clearer. It was the potential for deflation, and that was a real issue. Today, in some sense, the enemy is much more dispersed. It's almost like guerrilla warfare. You've got a lot of uncertainties in different parts of the economy, and it's much harder for the Fed to kind of fight those battles. It's much clearer for the Fed to fight deflation.
Now, interest on excess reserves keeps making his list, but even he says this isn't something that really would be good for the economy. It would probably destroy the money market industry.
Well, we're at 25 basis points. Other things are close to zero, so it's possible that there's a little bit of leeway in there, but I don't think a lot.
If you're going to go and look at long-term solutions. You're going to look at fiscal problems in the United States.
Sure.
Do you expect him to make a strong political statement? Congress do something?
It's not going to be a political statement, but I think he's going to make it very clear that the Fed can do a lot of things, like fight deflation, can provide the foundation for economic growth, but it can't get people to hire. It can't deal with fiscal issues. It also can't cure cancer. I mean, a lot of people think that the Fed policy is a complete panacea for everything. So he'll make it clear that in the realms that the Fed that central banks traditionally can have an impact, he can still have impact, but there are a lot of very important realms like fiscal policy where you can't ask the Fed to do that, and they can only do so much if you've got that ongoing fiscal uncertainty, ongoing regulatory uncertainty. That's going to hold back hiring.
Very quickly, your own personal view, optimistic, pessimistic on the economy?
I'd say mostly cloudy with a chance of thunderstorms, a little bit like what we've had here earlier today.
Yeah. Well, let's hope we don't get the hurricane that's coming to the west.
I don't think a hurricane's coming, but you never know. I never say never after the time that I've been at the Fed.
Randy Kroszner, thank you very much for being with us again today.